Taco Tuesday! Wake up, wake up, wake up! Because, after yesterday's absolute sleeper session, you're gonna need a little bit more extra coffee. And me, we don't roll the clocks back. So you guys got to roll your clocks back and, get your adjustment, however it is, extra hour. Not me. Market closes at 5 a.m. for the next 6 months. Somehow or another, I made it through yesterday all the way to the closing bell. And then I couldn't sleep for another 3 hours because my clock was completely screwed up. But back to work. Yesterday, flat, dead, Dow, NASDAQ, S&P. Really cool there yesterday on the S&P. Around 1:30, I said, hey, man, you're ABBA. Take a chance on me. 0 DTE SPX Lottos, 43.65, 85 cents. They dropped. They dropped. What was that? Yeah, 1 minute here. 135-ish? Yeah, right around there. Yeah, I threw it out here around 135 and they dropped. They dropped. They popped up to 160, 120. They dropped 30 cents, had a pop, and you dropped. Look at this. Look at this final right there. 15 minutes of the day. Oh my God. From 10 cents up to 270 where it closed. Man, you gotta love trading options. You gotta love it. So anyway, I'm gonna zoom in here and not waste your time. And I have a secret to reveal at the end of this, so stay tuned. You'll want to. Here are the futures, and the futures are down, boring, flattish. Very boring, but down. We are trading, where was it? The Kospi, the interesting one. The Kospi, down 2.25%. Down 2 days in a row after banning short selling for the next 6 months. It's true. Some of the tweets that are out there, they should just ban selling altogether. China, up 1%, up 2%. They had some data out last night on trade, which we're going to get this morning. The Nikkei down 1%. Really the only thing that's been factored in because of how they've been doing quantitative tightening and easing, and I'll jump over to the charts real quick over that in a minute. Euro stocks down 0.34%, FTSE a quarter, CAC, DAX, like I say, man, nothing matters. As I got you prepared going into last week, saying no matter what, we are getting a bounce. Whether it's bullish or it's bearish, we are going to get a bounce, and it's going to be violent. This far exceeded my expectations. We've gapped up 7 days in a row, right? We've now closed green 6 days in a row. This is the longest closing green consecutively streak since prior to the 2022 highs. So take that with a very, very large grain of salt that you are, and as you can see yesterday, 24.68 point range. Dead. Need to change this? Do I? No, I don't. We are still up 270 points on the bounce, up 6.5 points, 6.5% on the move, 175 points for the month of November, which is now 4 days long. Unfucking believable. Anyway, I shared it on Friday. It is here today. We have the trade balance at 8:30. And then we have speaker going into 2:30. Speakers have been pretty damn adamant saying, why you no understand English? We fucking tell you, there's no rate cut coming. No rate cut. We no cut rate. But traders are factoring in that there's going to be half a basis point rate cut over in the EU by summer, and that the Americans are going to cut rates 100 basis points before the end of the year. And my dick's going to double in size. Right. Fed Powell is speaking at 9:15 tomorrow morning after a machine gun of speakers that start at 3:30 in the morning, going until 9 o'clock in the morning with the EU finance ministers meeting, which will also have comments. I have absolutely no idea what Jerome Powell is going to say, if he says anything. And then he is speaking again on Thursday at 2 o'clock p.m. Everything is there and ready for what should be, because first and foremost, congratulations, Lawrence. You got your first chance to experience it. The safe trade, had to take it right at the open immediately. 4405, 4440s, or 4400s, 50 cents, 40 cents. The risk trade that was out Friday and out, actually Friday, I don't know if it was a little bit better than $1.50, but yeah, 43.80, 43.75, $1.50 credit, full credit, 43.65.98 with the close. 6 green closes in a row. Again, no plus 1% yesterday. Forget about minus 1%. That's been deleted way back here prior to the full moon. And yeah, today it's more or less the same, just because we closed fractionally higher than where we were. But again, today we are looking for that red close and bring you over to the QQQ. Dead sleeper. Less than a 3-point range yesterday. Absolutely sleeping, but did make a higher high, went up to 369.78. So we are now plus 8% over on the QQQ. Retracements changed a little bit. The 363.31 is now the 23.6 retracement, and I'll show you that over on the charts because it is right in line with that 363.61, and that was where, you know what, we'll start with that. Let's skip IWM, go to QQQ. QQQ 363.31 is a 23.6 retracement down to where this bounce started from. It's also your 23.6 retracement from your March lows to your July highs. Ties right in. This 363, 365 was where my intention when we got into the calls prior to last weekend, or sorry, prior to the end of the month, looking for that bounce, then getting a little bit paranoid because Israel was going into Gaza and said, you know, let's cut it out. Let the weekend do the weekend, and if it's prudent, we'll get back in on Monday. We got back in on Monday. As we went into Tuesday and Wednesday, the FOMC meeting, everything was copacetic. Copacetic, right up to 358 over there on Wednesday. Everything looked fine. Then we had this ridiculous fucking gap up on Thursday, and then again with the rate cuts are coming on Friday. So we're chilling up here, minus 10% from the all-time highs. This is a 30-day chart, so you're looking over here at your October highs. The dip that I'm looking for, you guys already know about, and I would expect it to be coming here in the next 2 to 3 days. Then we will reevaluate from there. Come back over to the SPX. SPX yesterday opened at the highs, troll down. 50-day moving average. Oh, no, not going to hit the 50-day moving average. Back down to the 50-day moving average. Oh, no, we're not going to break that 50-day moving average. And we wound up closing up here above 43.65 with those 43.65 calls just being absolute yummy, unbelievable for anybody. Now, I'm not talking about just in the room. Anybody on the fucking planet that saw what I saw but had energy, that you were taking this down here in the 10-cent area and riding this bitch up to 270 into the close. Oh, god damn. So here, SPY, 30-day chart, looking here at your October highs, right? October highs, as we came right up to that, and then all of a sudden we just kind of filtered off. Again, everything looked copacetic other than that fake print that we had there a week ago Monday. And then your humongous gap up there on Thursday off of that U.S. Treasury summary that you guys heard about Friday as well, with the we are going to cut rates, big gap up, and neither of those have been entered into. QQQ, we already covered. IWM, again, this is a 30-day chart. Here's your October highs, lower than where your highs were over here at the end of September when the full moon hit. Lower over here where we're at right now. And yesterday, you entered into that gap from Friday. So weakness has its weakness. Show you here really, really quick. Go around because it's Tuesday, not wasting anybody's time. Come out on a wider view. Crude, don't need to go that wide. Nice move, up to 95. Perfect place. Now we are breaking down. We are below 80 over here on crude, just about to test over here the mid-August lows. Not looking good at all for crude. Bring you to the Dixie. The Dixie is pretty damn cool. The dollar index was trolling all through that area here. Going back into the 30-day chart fits perfectly. Just absolute ping pong trolling. We ran up here as we were going into that beginning of the month, November 1st, up there, that plethora area, 107. And then the news that was coming out last week in the FOMC meeting just slammed this thing almost to that 104, and we've recovered right back up here to that 105, 106 area. Definitely something that needs attention for those that are snorting the bullish thesis that is going around everywhere. The Japanese yen, you had a little bit of news that came out here. You guys remember back in October, bang, bang, bang. And then all of a sudden you got your stimulus package up here to 151.70. Unreal. Almost to the October 2022 lows. And then bam, slam down, and we are right back here up above 150 again. Pretty cool chart when you zoom out here on the Japanese yen. Look here on your maximum monthly. We aren't where we used to be, but bring yourself over here to 1990. 1990, when Japan was in charge, when everything was made in Japan. 160.35, right up there. Whoo! We got problems. They're just not showing up right now in front of anybody because it started out as a bullish year. We're going into the final 2 months of the year. We're going into OPEX, which is November 17th. And we just had one of the most euphoric runs in modern history over last week. So rest assured, trades that I took there for Wednesday, November 8th, Elongate also got into it for Friday instead of taking the Wednesdays. Properly positioned, nothing to worry about with it. The ones that are already existing for November 10th, because of these moves here on Thursday, gap, humongous gap, and then run through it. Looking for a retracement, but not thinking that we are going to be breaking down much further than 360. If we break 360, something big is happening, a lot bigger than what I'm expecting it to be. So looking for the mid 360s, 363, 365, and then we'll take it from there and we'll see what we got. And so, yeah, my reveal that everyone needs to know about is my real name is actually Kevin.
Okay.
Done?
Yeah.
Oh, thank God. Okay, let's see. Okay. Oh my God! I love it.